right, we saved the most exciting session for last to make sure people would stick around. And so let's get into the insurance. I would, like he said, remember at the end, we're going to have some questions you guys can text in, and we'll have the underwriters kind of give their perspective on that. And so feel free to do that. We're helping. There's a lot to talk about in insurance. We won't get to it all today, but we'll try to get to the stuff that's most pressing, the stuff that we see when we're working with you guys on insurance, renewals, writing new business. One of the things that was said yesterday is ROR, return on relationship. And, you know, there's a lot of, insurance can be scary for businesses because you're kind of crossing your fingers and you don't know what renewal is going to bring. And if you've had a loss or a claim, you know, something like that, well, how's this going to affect me? And it's really hard to plan sometimes for the future. And so we want to do our best to give you guys everything you can do to control what you can control. Like some things are out of your control, but there are things you can do to give you a little more control over something like insurance and put yourself in a better position. And so I'm a big football guy. You always have football coaches are always talking about pay attention to the process. The outcomes will come later, but you have to be process oriented. And that's kind of the goal of this is we want to help you guys become better at your processes, and that will improve the outcomes over the long term. And so without any further ado, we got our underwriters up here. And so our job as agents is to get to know your business, get to know your risk, where you want to take your business, really know the narrative on your business. And then we take all that information to our underwriting partners at our different insurance partners, tell them the narrative, and then they'll tell us back, well, this is what we like. You know, we do want to insure this risk. We want to offer rates. And so we're kind of the middlemen. We play relationship. We're stewarding relationships on both sides. And so as scary as insurance can be sometimes, it still is a big relationship game. We're very thankful to have the partners that we have, and I'm going to turn it over to them to let them introduce themselves.
Awesome. Can everyone hear me okay? All right, thank you. So Olivia Stevens here. I was introduced as Olivia Gilbert, but I just got married, so hence the name change. I actually lead our truck business development team at National Interstate Insurance, which is out of Cleveland, Ohio. So we've been basically insuring anything big on wheels since 1989, and I work just in the truck space, so that's really where all of my customers reside, is in that division. I've been here for about 4.5 years now, and we're absolutely thrilled to be back at this conference. This is an incredible organization, and we're so happy to be able to be a part of it and support you guys.
Scott Slezak. I'm the underwriting manager at 10-4 Truck Insurance. We're technically in Carter Lake, Iowa, but it's a suburb of Omaha, Nebraska. Trucking is all we do. And yeah, just really happy to be here. Everything for us in-house. Claims team sits right next to me. Just trucking, that's it.
And I'm Kevin Blocker. I'm with Truckers Insurance Associates. I'm the underwriting manager and COO. We've been in business for 83 years. All we do is write truck insurance, but we don't write it on our own paper. We represent about a dozen different companies and try to find the best fit for each insured. So yeah.
Great. Well, we're glad you guys are here. It's always fun for us. You guys have folks that you interact with every day through email, and so most of our conversations are through email. So when we come to the conference and get to see everybody, put a face on it, we're like, oh, they're not just an email, name. They're actually a person. And so it's been great for our relationships to go deeper and hang out, and we're looking forward to our partnerships down the road. We're gonna jump right into it. Whenever we get information, whenever we talk to one of you guys and say, hey, I want bulk loads insurance to work on my insurance this year, we'll gather your information, your documents, get the narrative on your business, where you came from, where you're going, what your hopes are for the future. We put all that in an email. Sometimes it's a phone call, and we send it to our insurance partners, and they start to review all the information and the narrative on your business. So that's why it's important to have an agent who understands your business, who can really share the narrative with the insurance markets. And so for you guys, we'll start with Kevin. We'll give this first question to you. When you review a trucking account, what is the first thing you're looking at when you open it up to see if you might want to write the business?
Well, I'll give you a little more than the first thing I look at. So I always start at the bottom. I start with that cab report, looking at SMS alerts, out of service violations, severe violations, or chameleon carriers, things of that nature. I then proceed to look at the loss runs. What does the frequency, severity look like just at a glance? I then proceed to look at the driver pool, especially the driver turnover. The tenure of the insured, the drivers is the most important factor of the driver pool. And then I proceed with looking at the application. What are the commodities being hauled? Does that jive with the equipment that I was presented with earlier? And then finally, I end with the cover letter that the agent puts on there. Bulk is a fantastic partner. They do a great job articulating the account and putting together a great cover letter. Some agents are not so great at that. So I start at the bottom because I generate questions along the way, and I want to make sure that those questions get answered by that cover letter. And then if those questions are not answered by the cover letter, then I have to go back to the agent and ask a lot of questions. So again, Bulk does a fantastic job with articulating those issues ahead of time so that we can proceed with a complete submission.
Scott, this one's for you. When you're looking at a risk or looking at an account, how do you separate bad luck from a bad risk?
So that's really what underwriting is, right? It's separating the cause from the effect. The claims, the losses, that's the result, but what actually led to that? I've seen companies that do everything right, take safety seriously, have great drivers that had an unlucky year. I've seen companies that do nothing right, don't care about safety, and somehow get lucky and have no claims. So it's figuring out how long have the drivers been there? Do they have good MVRs? Is there a safety plan in place? Do they actually monitor that safety plan? It's determining that behavior that's going to help me figure out future results rather than what just happened last year.
That's great. When it comes time for renewal, or you're looking at a new account and you're looking at, claims history on an account. So a lot of times what we'll see is, one of our insureds will have a claim or maybe a couple claims, renewals coming, and they're really nervous what that's going to do to their rates. So when you're looking at claims, what carries more weight? Is it the amount of claims they've had, or dollars paid? I know there's nuance to that question, but what matters more? Is it frequency, or is it number paid out?
Yeah, that's a really good question. I think the question there is it frequency or severity, and what are insurance companies more afraid of? For us, the simple answer is frequency. And the reason for that is because we're always saying frequency breeds severity. Frequency breeds severity. So the more frequency on an opportunity that we're evaluating, most likely the more potential for true severity there is. So for us, frequency is more concerning. You can be the cleanest operator out there and you can have a catastrophic claim that's not your fault. So for us, I mean, that's one thing that I can definitively give you an answer on, which doesn't happen a lot in underwriting. But if you take one thing away, frequency breeds severity. I mean, every underwriter out there is probably going to say that same thing.
Do not at fault claims, things like animal strikes, do those count less when you're evaluating for the future what the premium cost should be?
Yeah, absolutely they do. And especially close without pay claims really don't count for anything with most markets that are out there. So I know later we're going to ask the question of when should you report a claim. Every time you have a claim, you should report that claim immediately. If there's an injury, it should be reported same day. If it's a deer hit, sure, wait till the next day. But absolutely, every claim should be reported. If it ends up closing without pay, that's great. We're just going to ignore that from an underwriting standpoint. If it ends up being a minor deer hit, yeah, we're going to look much more kindly upon that than we would if they collided with another automobile.
Is there if we're looking at strictly from a numbers perspective, if you're looking at their account, well, we paid out this much in claims this year. So in order for us as an insurance company to make our money back, we need to move their premium up. Is there a number range, dollar range? We have a lot of customers ask about this, where it makes sense not to file a claim, or to file a claim and then they pay it out of pocket if the damages turn out to be lower, just so it doesn't hurt them on their loss runs as far as how much the insurance company paid out on their behalf.
So speaking for 10-4, it's the details that really matter. There is no number or dollar threshold that's going to make a difference. Like Kevin said, that's the best advice. Report everything. We'll figure it out. If it's not at fault, we want to know what happened on the details. It's not going to hurt your premium. We're old school. We want to hear what happened and help you.
And I'll add a little bit of color from our perspective at National Interstate on that. So I know that if your driver backs into a mailbox and you have to pay $500 out of pocket, you're going to do that. You're not going to want to report that claim. And that's understandable. I mean, that's the kind of thing that we're dealing with a lot of times. But the one thing I would caution to is if you're only reporting severe claims, and not the lower cost, small kind of you hit a deer, hit a mailbox, whatever it might be, that paints a different picture for us as an insurance company. And it makes it seem like you've got a severity problem where every claim you're reporting is a high cost, severe claim. So if you're reporting every claim, then we have true and accurate data to deal with. And it makes our job a lot easier, and we're able to be a lot more accurate in our rating and in our cost structure.
That's great.
And I'll just add to the mailbox example, I'd still say report that claim, because we've seen situations like that where the driver thinks he just damaged the mailbox, and then all of a sudden, oh, well, he actually put ruts into the ground. It's going to cost $10,000 for the landscaping company to come back in and fix it. Maybe there was the owner's dog that was killed in the process. Who knows what could have happened? Report the claim. If it ends up being a $200 mailbox, you can end up paying it later, and we can end up closing that out without paying.
When we'll have worked with customers who maybe have had a history of losses, and the premium that's hitting them really hard is finally they've convinced a lot of them, like, hey, we got to clean things up, and they are making an effort. When you how long do you need to see improvement if an account's in the red and something you're not comfortable with? Like, I know there's nuance to everything, obviously, but how long do you typically need to see things trending in the right direction before you would give somebody a shot? Does that make sense? Anybody can take that one.
That's going to be tough to tell. It's a case-by-case basis. It varies wildly by the size of the account, how bad it was before it started trending in the right direction, what else is trending in the right direction. Are your CSA scores improving as well? Is your driver retention improving? Is your driver management improving along the way? If you're trending in the right direction on a number of factors, then that's going to weigh in pretty quickly. If you're still doing everything wrong, as Scott said earlier, if you're still doing everything wrong, but your losses happen to trend in the right direction, that's going to be a much slower return to more reasonable pricing.
Can you talk more a little about, you mentioned the size of the company. Can you talk a little more about, claims as far as how you evaluate claims for a 1 or 2 truck operation opposed to a bigger fleet?
Sure. So basically, the bigger the fleet and the more time you have, the more data you have as an underwriter. So with the small fleet over a small period of time, you got to make some guesses and assumptions. The bigger you get, the more the data is going to impact decision making.
That's what we try to communicate to our guys who are just now starting out. There's only a handful of markets that want to take a new venture, and that's why they just don't know. So you have to prove yourself for a couple of years, and it's tough because when you're starting, you get to pay higher premium or higher, rates per truck, and it's tough. But it's just part of the game. There's no data to go off of. What are Olivia? You can take this one. What are the most common reasons? So if you got somebody you're insuring, what are the most common reasons trucking companies get non-renewed?
Yeah, that's another good one. So the kind of low-hanging fruit is losses. So that would be the first one. Second, I would say change in operation type. That would be one that we would reevaluate if it fits within our underwriting appetite or not. The second one that I see a lot more these days is we lost control all of our current customers. And if those loss control visits don't go well and people are going backwards in their progression and safety, or they have an attitude of being unwilling to implement new things or something of that sort, that would be something that could cause the underwriting team to see them in a less favorable light at renewal.
We got a question that got texted in here. It says, would a carrier pulling hopper bottoms, hauling grain and feed commodities, see a spike in premium if they branched out into tankers and hauling non-hazmat liquid fertilizer? You kind of mentioned that. That's why I brought that question up. Kind of mentioned.
I think it depends a lot on what your expertise is going into that. If your drivers have expertise hauling that commodity, if you as an owner have expertise with that, depending on the radius change of what you're doing with that, we could mitigate that to a degree. But if you have no idea what you're doing, you're probably not looking at a favorable result.
I got another question here. It says, I've seen some instances where carriers only have only insured, for example, 2 power units of a 6-unit fleet and using drivers that aren't listed on a policy due to having international CDLs. Most of the time, power units are not listed on certificates of insurance. How do we combat issues like that in the industry and level the playing field on that front? I can't compete rate-wise with carriers that only insure 25% of their fleet.
So huge issue in underwriting, something we take a lot of steps against. A couple examples: if a truck is inspected under an authority that is not on a policy for an authority we insure, that's a huge deal. We're asking a question as soon as we find out about it. I get a daily report, so you're not going to hide from me for very long. You're going to see a lot of telematics data used today that basically shows what's running under your ELD. So if a truck starts moving that's not on the policy, same thing. We get notified day of. Having trucks running that aren't on the policy is a really, really big deal. Insurance companies are getting better and better every year about figuring that out.
Good. Let's talk a little bit about transparency. As far as, does transparency with your broker, does it help? Do they need to be protective? Do they need to be transparent? Like what are you guys looking for?
Yeah, I mean, that's huge. So we have really close relationships with our brokers. And by brokers, I mean our agents who go out into the marketplace and find prospective customers like you guys. So our distribution at National Interstate in the truck division is a closed broker model, which means that only a handful of agency partners across the country can go out and bring customers National Interstate products. So that relationship that we have with our agents is really important. And in turn, the relationships that they have with their customers and their truckers are really important because they have to be able to tell the story of the trucking company to us. And we're going to be asking that question. I mean, part of my team's job on every account that we get in is to call the agent and say, what's the story with these guys? How long have you known them? What are they like as a buyer? You know, what do they need on this renewal? And that agent has to be able to accurately and honestly answer those questions. So if they don't know, it's hard for them to do that. So in order for you to get access to good insurance markets out there, you need to have a close relationship with your broker who's going to advocate for you and who's going to be able to go to the insurance company and tell your story as a company. And that story really, really matters, at least for us, it does.
I'll just add that as underwriters, we're pretty good at identifying when someone's lying to us. The story has to make sense with everything else that we're looking at. There's so much data that we have at our disposal that we might as well be transparent because we're trying to get to the truth together and find a way to write an account. So absolutely, transparency is important.
Yeah, that's why our relationship with you guys is very important. And so when we're even bringing business opportunities, it's important for us to be honest with you, have a great relationship. Because if we burn bridges with them, we lose markets that could be possibilities to help your business. And so it's really we have great relationships on both sides, and always trying to get the best for our customers, but also keep a great relationship with you guys. And so it's a fun gig. I got another question here that got texted in. Considering accidents involving automobiles that are at fault, are there any changes coming to increase premium coverages for automobiles to get closer to truck values? I don't know if that, example, at-fault driver insurance company paid us $25,000 for $150,000 total loss. Does that make sense?
The short answer there is that's a governmental question. By all means, lobby your representative to try to make that happen. I don't see either political party trying to make that happen. It doesn't help them because it's going to increase pricing for those individuals who are trying to get minimum limits. So I don't see that changing anytime soon.
Is there, here's a great question. How can you accurately assess the steps we're taking to improve our operations if you've never been on site and are working remotely?
On-site loss control visits. I mean, every account over 20 units, we're doing that. And then by request for anything smaller than that. So on-site loss control visits all day, every day. We also have a lot of trust in our agents, that our agents are going to be able to accurately portray what's going on with the operation and the quality of the operation to us. So that comes back to that relationship piece and being able to trust your agent to do that for you. It's really important.
And I'll just add, we're also just looking for improvement, positive trending. If you tell us you started a safety program this morning, okay, that may be true. We're looking for positive change along the way. So if you're explaining to us what you have done to improve your operation, we're going to look for data indicators that show that there's actually results that are trending positively with those changes.
That's good. Another question here. We are in a captive for our GL, AL, auto, FISDAM, and work comp. Is there a captive umbrella for excess policies? A captive umbrella excess policies?
I work a lot with captive programs on the primary. So 70% of our business at National Interstate is captive business, so it's a huge part of what we do. But we do not have an excess program we don't have an excess program at all. And I'm not super familiar with other excess programs out there in the marketplace. Are there some potentially, but that's something that you'd have to talk to your agent on.
Do you see rate going up on trucks that are older, pre-E-log versus E-log trucks in the future?
I don't know if I'd say that alone will make the rates go up, but ones with E-log, with all the telematics and more technology coming out, they're seeing rate decreases. So I don't know if it's necessarily you're getting an increase. It might be their costs are coming down. I do think having dash cam, E-logs, all those safety features really do help you out.
You know, most of what we do, and I've been doing this for 25 years, a lot of things have evolved in that time, but it has always come down to the driver management. And all of these new technologies that are available with cameras, with telematics, all of that serves to help you coach your drivers and to help them improve their safety. Whether you're using it as a carrot or a stick is up to you, but using those tools to manage your drivers is what will result in an improvement in your insurance perspective. So if you've got an older truck, that's just one tool that isn't at your disposal because you're not going to be able to get the telematic data on that old truck. But you have other tools to manage your drivers even on those older trucks. So it isn't the end all, but it is a tool that's not at your disposal on those older trucks.
When we're shopping our clients out, one thing I've always thought about is when you see the insurance history of different carriers, and you have a trucking company that they're switching insurance carriers every year, every 2 years. What does that communicate to you? Do you guys prefer it if you see them with somebody for a long time, or what do you guys think about when you see that in their history?
You want me to take that one? So my perspective is it depends a lot on who those carriers are. And I'm not going to articulate who they are. There's a spectrum of quality of insurance carriers. And if you are repeatedly changing carriers and they're all the bottom of the barrel options, that says something about your operation, that it tells me something. If you have been with a really high quality carrier for 3-4 years, I really want to write your coverage. Now, that means it's harder for me to write your coverage because you're probably pretty happy there, and I really need to beat them on a pricing standpoint, from a value standpoint. But you're a much more attractive carrier than someone that jumps around every year from bad option to bad option.
I'd echo that as well, for sure. I think longevity with an insurance carrier is always a green flag for us.
That's great. Um, are there, for you guys, for your individual companies, are there discounts or just in the market in general for installing dash cams?
Yes.
Yes.
Sometimes. I represent a lot of different companies. Some do, some don't. Again, the results are good. So if you have that dash cam, it's going to pan out better for you in the long run.
Absolutely.
Yeah, we have subsidies for a multitude of different telematics service providers that we partner with. We do it on a per unit, per month basis. And then we also have discounts or subsidies, whatever you want to call it, for utilizing DSAs, which are data sharing agreements. And then we also have discounts for folks who just have inward and outward facing cameras. I mean, or just outward facing cameras. I mean, all of that is going to fare really well. It's also going to get you better pricing with us.
Quick comment on inward versus outward facing dash cams. We really like the outward facing dash cams because it helps tremendously with claims. I think something like 70% of disputed claims, the truck driver is exonerated when you have dash cam footage. Inward facing, we don't really look at. I don't need to see anyone pick their nose. In fact, we offer a dash cam program and we only even offered outward facing ones.
Some do. And that driver facing camera can help you coach your drivers. If you see a lot of distractions, if you see a lot of handheld devices, things of that nature, it can be helpful to you to manage your drivers.
What's the average? This is another nuanced question. Of course, it'll be different depending on what's going on in the market. But what's the average percentage increase at renewal you guys are seeing currently across the board? Or if I've performed really well, can I see a decrease in my premium?
Average across the board for our book of business, we don't have one because we're not giving average rate increases across our book. I can give you averages by captive if you want to come talk to me and ask about that. But I think generally insurance companies, 2-3 years ago, 5 to 10% was inflationary, and it's unfortunately not anymore. So I think it really depends on the operation. Can you get a decrease at renewal? Sure, that's possible. But I think at this point in time, a flat renewal is kind of a decrease given the environment of inflationary issues we're seeing at renewals.
We won't increase a renewal unless we have a specific reason to point to. So if you had a good year with us, your premium will not go up. More often than not, it's going to go down. So I think our average among customers that had good year is actually a negative number. It's typically a decrease.
The trend in the industry is up. How much is up is a question mark, but you can thank those billboards at the outside of every city saying, "Have you been injured in a truck accident?" That's why the pricing is going up. Also, all of your mechanics want to be making more than they did 5 years ago. Just simple inflation is impacting that.
We'll get a couple more questions here, and then we'll wrap it up. Got a lot of questions coming in, and so if we get done here and you don't get your question asked, you can always catch them at the back before they run for the airport. So you guys don't run off too soon. For driver management, do you have any recommended protocols or programs that you suggest that we use?
I think a good old-fashioned incentive program is always a good thing. I think utilizing, if you have any type of data or telematics data, to put together an incentive program is awesome. But I think that there's a lot of different resources that we could talk about for putting together driver training programs, but incentives are always good. Everybody likes that.
And I'll just add, drivers want to be loved. They want to be taken care of by their company. They're not going to leave for a 2 cent increase in pay to the next guy down the road if they're valued, if their opinion is valued, if they are taken care of. So if your dispatchers are perpetually have a bad attitude, if they're difficult to work with, that's not going to pan out well for those drivers. There's just a number of ways that you want to take care of those drivers because they will absolutely take care of you if you're able to hold on to those great drivers. Just like Ken Foltz was saying earlier, drivers that have been there 30 plus years, that those drivers are fantastic to hold on to. And so that driver turnover that comes if you don't take care of your drivers will bite you so much harder than taking care of them would.
A lot of times when we're quoting, we'll have markets come back and say, no, we're not really interested in this, just not in our appetite. And so when we explain that to customers, sometimes they don't understand, well, what's wrong with me, you know? Can you guys talk a little bit? We had a question here, says, as a carrier with end dumps in their fleet, what can we do to look more favorable to insurance companies? In the past, just owning end dumps has been the reason given by insurance companies to not offer us insurance. Can you guys talk a little bit about appetite, maybe specifically when it comes to end dumps?
Sure. There are some carriers out there that just don't like certain types of operations, and they're probably not going to change their minds. But there's a lot of gray area. So being an end-up operation doesn't mean that you're a bad operation. Having great vehicle maintenance scores will help you get a better quote or more options on a quote. Having vehicle stability controls. Dump operations have a tendency to go around curves too fast. They have a tendency to blow through stop signs. There's a lot of things that you can watch more carefully to make sure that you're more attractive. A lot of the drivers in end-up operations are paid by the load, and the more stop signs they blow, the more loads they can get in a given day. So there's some reason to consider how you're paying your drivers with an operation like that.
Last question here, and we'll wrap it up. Each of you can answer this. If you ran your own trucking company today, what is the one thing you would do to protect your insurance position in the market for the long term?
I can go first. So a close friend and mentor of mine has this saying he's instilled in me, which is marry the mundane. What that means is do the small but maybe boring important things very, very well. What that means to me on a personal level is something like do the dishes as soon as dinner is done, or clean up my 1-year-old's toys while mama's putting her to bed. What that can mean for you as a trucking company is have a safety plan in place, implement it, and have a form of monitoring it. Document everything properly. Do your pre-trip and post-trip inspections. Those little things, that extra 5-10 minutes a day can add up. If it saves one claim or lowers your insurance premium 10% at renewal, it pays for itself in spades. So marry the mundane.
That's great.
Yeah, I would say make sure that your safety program is on lock. Review your safety, like anything written on safety, review that in depth and make sure that if there's anything in those handbooks or written, that you're either doing them and following that protocol or getting it out of your handbooks, because that's one thing that will come back and bite you in the butt. I think also I would install outward facing cameras in my fleet, and I would teach the drivers how, that can be used to their benefit and to protect them.
And I'll just say, similar to what these guys said, if you've got a safety program in place, every component of that safety program should be done with intentionality. Collecting data and not doing anything with it, that doesn't help you. That doesn't coach your drivers. That doesn't make anybody feel better about it. So use that data with intentionality, whether it's the telematic data, whether it's the cameras, whatever driver coaching that you're doing, it should all be with intentionality to improve the safety culture of your operation.
Awesome. Well, Olivia, Kevin, Scott, thank you.
Thank you.
It's been a blast. We love hanging out and getting to deep dive. And a lot of times we're talking to our customers and say, no, the underwriter says we can't do this, or the underwriter says we need to see this. And so here is the underwriter. They're our friends too. So, but thank you so much for sharing. You guys have been great to work with. Always very responsive to help our customers, and it's just been a blast. We look forward to working in the future. Will you guys give them a round of applause?
Thanks, Brad.
Thanks, guys. Thanks for your questions.